Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, September the 13th, 2024. That was definitely not bad luck in the crypto world today. Things rallied very nicely. So it looks like we have hammered out a decent bottom, and we can review the charts and get a little bit more certainty about the wave counts that we are tracking. I'm going to leave all these slides for you to review later. I think it is important and paramount we go straight to the charts because that's really where the rubber meets the road. So this is our preferred alert wave count for Binance Coin that we are going to finish up our last wave 5 into the 900 to 950 region. Okay, so we have broken below several warning levels. This is the monthly chart, intra-month, but not yet on a monthly closing basis. We still have, of course, 17 more days to go. But this is the preferred wave count that we had this diagonal wave 1, and then we bottomed right here exactly at the 76.4% retrace. Within pennies, you can't make this stuff up in what looks best and counts best as a ABC corrective pattern. So here we had 1, 2, 3, 4, ending diagonal wave 5, very extended, a swift decline back to the start of the diagonal and the impulse, which of course starts technically when we have the wave 2 pullback, because when wave 1 goes underway, we don't know yet if it's going to be an A or a first wave. So exactly the 76.4% retrace, and we have rallied strongly from it. But of course, we haven't broken yet above the wave 1 high, which is at about 620. That needs to happen. But as you can see, we did break back above the Ichimoku cloud. We did break above the 20 and the 50-day simple moving average. So technically, this chart is improving rapidly. But we need to reclaim the 200-day moving average as well. So we have now raised the warning levels for the bulls accordingly. And the first warning level, I would say, is at about 540. But actually, I'm going to raise that a little bit more, which would be, of course, Fridays there, this level. That's this high, that's there, that's there, that's there. So this looks technically really good, which is at about 544. The second warning level is at 530. The third warning level is at 513. And if we go at any moment in time below 480, we have to revise the wave count or switch to the alternative wave count, which is that we have topped for wave 5 of 5 already at 725. And all we did was a counter trend B wave bounce, and then all of Binance has topped in a massive primary 5, and we're probably going back to the double digits. Yeah, this is not yet confirmed. The warning levels for the bears are on the chart: 610, 625, 680, 725. And of course, any successive break above it higher on a monthly closing basis means that, of course, the preferred wave count becomes more and more likely, and conversely so. So this is still the preferred wave count. The price action over the last couple of months looks corrective. This looks corrective. This is an A, a B, and a C lower. There's no way I can count it as an impulse so far to the downside. So I like this as an ABC lower of a irregular flat wave 4. Okay, so the A, the B, the C. That's what we're looking at right now. And I have no further news for that one. So that's where we're at. Then we move on to the big boy, Bitcoin. Bitcoin broke today back above the Ichimoku cloud, which is always a good start because nothing bullish happens pretty much below the Ichimoku cloud other than often counter trend rallies. Okay. Of course, bottoms happen always below the Ichimoku cloud, like good bottoms, but the trend changes from down to up. That really is a good delineation. So, for example, we saw here the bottom on August 5th and how price was unable to reclaim the Ichimoku cloud right here in mid to late August. It stalled right at the upper end and declined again. And now we're back above it. So this is definitely different. Yes, it could be a B wave top. We still have that alternative on the table. But for now, we're back above the 50, the 20, the 10, and we need to reclaim, of course, the 200-day moving average. So back above 64,500 to further solidify this potential ending diagonal. It still remains a potential. The meantime, we have raised the warning levels for the bulls. First one is about 58,100. The second one is about 57,030. The third one is about 55,500. And then the last one is, of course, the September low. If we break below the September low, I'm going to fully focus then on this very protracted wave 4. And then all we got in September was another A wave low, another B wave high, etc. Corrections can morph from 3 waves down into a WXY, can morph into 11 waves down, right? Here, for example, this was good enough for a correction. Already here in April, it was good enough for correction. 3 down, 3 up, 5 down, correction could have been over. No, the market decided we're going to tag on another 3 waves, okay? And that means we're going to get another decline. Correction could have been over. Again, this was the cleanest impulse I've seen in my whole life. It was a C wave, unfortunately, and another leg lower. So we can keep on doing this party till the party is finally over. Once we break above 65,000, the bear party is truly over. Right now, I think they're taken behind the shed, but there's no beating just yet. All right, they've just been taken behind the shed and they got warning. They probably were caught smoking or something in the classroom, and that's what we got. So this is proverbial, of course. This is where we're at, and yes, this looks decent bullish, but that's about it. So the bigger picture wise, we're still in the initial bull phase. We haven't completed the final mature bull market yet, which suggests the top later in 2025, again, 108 to 140,000, contingent on holding, of course, above our critical price levels. Also, the weekly chart I shared with you, the fractal we had in 2019 and currently. It doesn't look that way if you look at this chart, but if you really zoom in, the 18 hit points or similar points, we had the down, the up, the down, the up, the down, the up. And sometimes the up is a little bit higher than previously and the low is a little bit lower than previously, but the pattern remains the same. This was corrective, so this is most likely also corrective. This was the second wave, and this appears to be a fourth wave. Fourth wave can be anywhere between 38.2 to up to 61.8%, as long as they don't overlap with wave 1. And so far, that's what we've done. So nothing out of the ordinary here yet. And now we need to see price rally. Ethereum, I'm sorry, Ethereum bulls, I have nothing really too good to tell because the rally so far is very pathetic. I'm still not very fuzzy about Ethereum, but it could happen. We need to see a lot more price action, especially above 2,800 to turn this ship around. Link, on the other hand, as long as last month's low holds, which is at about 806, we can allow for this potential impulse to kick in. And of course, back above about, that is probably 24-ish, this potential wave 1 is very bullish. Maytech keeps holding this critical 35-cent level as long as it does, while it is also getting very oversold on the monthly. This potential wave 4 can finally have completed again as a protracted wave. We had potentially enough waves in place already, but no, it needed to decide to, it decided that it needed another ABC. And it can always happen. That's why we have the warning levels in place until proven otherwise. And in this case, a break above 130 will, I think, really seal the deal that we then finally can go potentially to double digits, but I'll leave it at about $6 to $9. Last but not least, Solana. Solana keeps flirting with the 120 level. 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months, 8, 9, 10 months in a row, pretty much. We've been tagging this 120 level. Absolute critical. Below it, we go to 85. Below 85, we go back to 45. Below 45, back to 27. Below 27, it's going to be in the tens. That's how it works. If we can finally hold this or continue to hold this 120 level, we can reach 210. And above that, we can target the 300, which is our preferred wave count. But we still haven't seen 5 waves up yet. Which is much more likely above, I would say, 170. That is last month's open, the previous month's close. You see this level here. It's critical. If we can get above it, I think 210 should be on the radar. And above 210, we can target 300 based on simple symmetry. So those are the most important cryptos we are tracking. And again, let's have a look at the fear greed index. Yesterday, it was at fear. The week before, extreme fear. It currently is neutral. Okay, that works. Let's look here at the longer term trend. And as you can see, we got some pretty serious oversold fear readings. Nothing too fearful, but most of the time, this is where important bottoms tend to happen. So we had quite a lot of fear. Could be more fear, but beggars can't be choosers. So again, oftentimes when we have those low fear levels, a bottom is being hammered out. This is again the halving cycle theory for Bitcoin, as I showed you here as well, the 4 cycles of Bitcoin. And also here, this is from our friend CryptoCon on X. It suggests that we just completed these October to August lows from 12, 16, 20, and currently 24 in September. So it matches pretty well. This is I guess, a strength indicator, and it is right here at 1. And oftentimes after peak, it means the next bull run will happen, which is the year 2025, just as it was here 2013, 2017, 21, 25. Upside target also here, 125,000 plus. All right, 108 to 140,000. Perfect. I like it, but price is the final arbiter. I do want to point out this is, of course, the monthly chart, and we're well above the Ichimoku cloud, so that is very good. Let's see if I have a moving averages chart as well for the month. No, not that one. Maybe here. This one. Yes, let's see. We're still above the 10-month, the 20-month, and the 50-month moving average. So this is still a long-term bullish trend. So we likely completed this wave 4, wave 5, and then a potential another 4 or 5, but it is not necessary. We can just do the last 4 or 5, and that be it. But preferably 3, 4, 5 as this. So we're now in green 5, red wave 4, red wave 5. Here, red wave 4. We're going to get green wave or black wave 3, black wave 4, black wave 5. I haven't put it on the map yet because I want to see confirmation. So there's still a lot of work to do for the bulls. But the last few days on the daily time frame look reasonably okay, but it's still just a drop in the bucket. We need to see a lot more, and especially Ethereum bulls need to come to the party, or Ethereum might just suffer the consequences. And that's really unfortunate, but that's just the way it is. And Ethereum is not Bitcoin. They do not have to move in tandem. Okay. I will always say Ethereum is the ecosystem and Bitcoin is what you pay with on that ecosystem. But maybe my explanation is way too simplistic. In the end, it doesn't really matter. Price is the final arbiter. And for now, as long as we can hold the September low and especially the August low, we can allow for the next bull phase to start. Take care, trade safe, and I'll catch you all next week.